Gold hits all-time high of 1,30,800 rupees per 10 grams. Silver surges to 1,85,000 rupees per kg ahead of Dhanteras amid festive buying and weaker rupee. LG Electronics India shares debut with a 48% premium. Stock surges to 1,736 rupees apiece. IPO oversubscribed 54 times. Company valued at 1.14 lakh crore rupees. Tech Mahindra Q2 net profit dips 4.44% to just 1,194 crore rupees in revenue. This rises from 13,995 crore rupees. That's the dip. India's mobile phone exports surged 95% to over $1.8 billion in the month of September this year. US shipments nearly double. Sector set to reach $35 billion in FY 25-26. Union IT Minister Ashwini Vaishnaw proposes Andaman as global internet data hub, urges submarine cable extension to Myanmar as well as northeastern India. And Facebook, WhatsApp, Instagram owner Meta introduces default PG-13 content for teen Instagram accounts, restricts age-inappropriate posts, expands parental controls and limits interactions to enhance teen safety. Google has announced a massive $15 billion investment to set up its largest artificial intelligence hub outside the United States in Visakhapatnam, here in Andhra Pradesh. Now, the announcement was made on Tuesday, with Google Cloud CEO Thomas Kurian calling it the company's largest AI hub investment anywhere in the world outside the US. Now, the upcoming 1 gigawatt data center campus will be a key part of Google's global network designed to power advanced AI workloads, cloud services and digital innovation. Now, earlier, Andhra Pradesh officials had estimated the project at around $10 billion, but Google has now confirmed a higher $15 billion investment to support long-term capacity and sustainability goals. Google CEO Sundar Pichai spoke with Prime Minister Narendra Modi about the project, and in a post on X, Pichai called the plans for the first ever Google AI hub in Visakhapatnam a landmark development. Google will partner with Adani Enterprises to develop the massive campus, which will include co-investments in clean energy generation, new transmission lines and advanced energy storage systems to ensure sustainable operations of the data center. An estimated 5,000 to 6,000 direct jobs will be created at the AI hub in Vizag. Now, the investment highlights the growing competition among tech giants to build next-generation data centers capable of handling massive AI workloads. Globally, Google plans to spend as much as $85 billion this year on expanding its data infrastructure, and Visakhapatnam is set to become a critical part of that global AI network. Just listening to all the speakers there at that signing ceremony yesterday.
This AI hub will be a very important contribution to the AI mission goals in 3 different ways. First, skilling. We all know that AI is fundamentally changing the way the world moves today. The second thing is about the undersea subsea cable. My request is that Andaman is a very strategic location. Singapore is today all choked. Why can't we make Andaman as the next big?
Your creativity, your speed. That is very, very important. Just now, our friend has shown transformational changes in information technology. Fortunately, I was associated all these phases. From iTech City and IT promotion, started in Hyderabad, that is late 90s. Today, 2025, we are talking about data center and artificial intelligence.
Today, though, we are incredibly proud with the support of the government of India and the state of Andhra Pradesh. We're very pleased to announce a new gigawatt scale AI hub in Visakhapatnam. It's the largest AI hub that we are going to be investing in anywhere in the world outside of the US. It represents a capital investment over the next 5 years of $15 billion.
All right, so let's get an expert view on what this $15 billion investment, the largest made by Google outside of the US for a data center or an AI hub, means for India and means for Indian entrepreneurs. Manish Maheshwari, General Partner, BAT VC, joins me this morning. Good morning, Manish. Pleasure having you here on News9. First up, just simplify for our viewers. What exactly is an AI hub? Is it just a stack of servers that help store data and offer AI the compute power to process user queries on, let's say, a ChatGPT or a Gemini?
So the way it is being positioned, it is way more than the data center. It also is positioned as something that will lead to innovation, skilling, etc. So clearly, the read I'm getting is that it is not just a pure data center where data is stored and processed. It's also, thinking about how that entire infrastructure can be used. So probably think about India-specific innovation and also, thinking about training models for India and perhaps also about, how they can help, the talent and skill set to improve in India with respect to AI. So I'm thinking about it more of a something which is beyond the data center.
What does this mean for Indian entrepreneurs? You're saying this is something which is going to help skilling and help in development of India-specific solutions. But will the cost of compute, for example, come down for Indian entrepreneurs and tech geeks? Or the cost is going to be pretty much the same because you're paying a service provider, and that service provider, whether his servers are in India or anywhere abroad, is not likely to make much of a difference?
See, there could be cost implications because if you are doing something local in India, the labor component of that cost will come down for sure, because clearly you will be able to do things at a much lower cost. At the same time, they are getting subsidized land infrastructure. So ultimately their cost of operating will also be lower. So your operating and management cost will come down. And my view would be that if they are working very closely with the government, they would also feel like it would be good for them to do things at a lower cost in India to help the entrepreneurial culture here. So in my view, I would see this as a positive, right? I mean, I would see that the cost will be lower here. Having said that, a big component of the compute is the chip cost. I think they will have to couple it up with they have to also think about how they can bring that cost down as well. So overall, I see a cost to be lower, but may not be very significantly lower unless they also make intervention on the chip side.
Right. So let's talk about the chip side for a little more. So the chips or the GPUs which will be needed to power these data centers, at the end of the day, a good chunk of that $15 billion is likely to flow back into the US economy for want of NVIDIA chips, given there's hardly any competition there. So how much of an advantage India are we talking about with this $15 billion investment?
Yeah, that is a great point. In fact, today I think the entire world buys NVIDIA chips for processing, and I think there is not any substitute at this point in time. I also feel that India is now beginning to think about diversifying beyond that, and the question then becomes how soon they can do that. But until that happens, I would agree that a big part of this cost will go into NVIDIA's kitty until we have innovation on that front as well. In addition to the data, just establishing data center will not solve that. You also have to think about the GPU side of things.
Right. And how much of this investment or this sort of focus on building an AI hub ties back to India's own quest for data sovereignty? Does this now mean that because these data centers are going to be based in a larger AI hub in the sovereign territory of India, India has complete sovereign right over that data, and India may decide to shut down access to that data if it intends to?
Yeah, I am not a legal expert on this, but I would believe that it would fulfill the data localization need, right? I mean, in the current situation, countries are getting stricter about where the data is moving and where it is getting processed. At least here, what we know for sure now is that this data center is located in India, and therefore it meets the local requirement of storage locally. Now, legally, what could happen and all that, I think you'll have to ask a legal expert. But I think it's a move in the right direction when you think about, India, the sovereign discussion that is happening about having rights over the whole development in the area of AI. I think this is a step closer to that from an India perspective.
All right. And I also want to talk about this, this larger fear that looms around data centers and AI hubs, that data centers are large energy guzzlers. And I was reading somewhere that a 1 gig data center like the one that Google has decided to invest in is as much as perhaps the entire city of Vizag when it comes to energy consumption. Now, who's going to make the investments on the energy side and on the distribution of energy? While Google is saying that the AI hub is going to be, in that sense, self-sustained, there are going to be enough, energy solutions as part of the AI hub. But then $15 billion doesn't seem enough to have pretty much, energy for investing in energy and its transmission, production and transmission for an entire city.
Yeah, no, I think that's a global discussion as to, how we can make this entire, data center kind of operations more energy efficient. And I think a lot of innovations are happening, but I agree with you that this will lead to energy consumption, but also you have to weigh it up against the benefits, right? I mean, from being a consumer of AI, this enables India to move towards become a global infrastructure node. It also lowers the latency, it enables sovereignty. And it also makes India a more competitive AI destination for everyone, right? And it has ecosystem and value chain capture advantages as well for the country. And not just that, it also is very strategic and also signals, something very important in favor of India geopolitically. So while, energy consumption will go up, and I think there will be innovation around how to make it more efficient, and that's happening globally, and I think India would benefit from that as well. But that doesn't mean that, we should not do these things. I would believe that the kind of partnership that is happening with the major business houses in India, I think I also heard the name of Adani, Airtel. I think there would also be a concerted effort, in my view, towards clean energy infrastructure, so that, while we get the benefits, we can manage the downsides of the significant fossil fuel-based energy consumption.
Right. So let's talk about those corporate houses. Of course, the Adani Group bringing in the infrastructure expertise, potentially even the energy expertise and the sustainable energy expertise, and Bharti Airtel likely to bring in the telecom link to ensure low latency that you were talking about. But does this now mean that potentially the Adani Group is now right on top of the AI infrastructure boom in India? Because earlier, Reliance and Brookfield had announced data centers in both Mumbai as well as Chennai. We also heard from Hiranandani Group and Yoto make similar announcements. But now with this $15 billion deal, is it fair to assume that Adani Group is right on top when it comes to AI infrastructure in India?
Yeah, I would say that I'm glad to see some diversification versus like having the same name. So I think Adani is a new entrant in this game, in my view. But they have a solid track record in terms of building infrastructure. Look at the airports, look at the kind of ports they have built. And this is the next phase of any country's growth, is like how well they capture the upgradation of the technological infrastructure. Because I think in the future is not going to be physical infrastructure only. It is also going to be digital infrastructure. And digital infrastructure also has a physical leg, which is the data center, which is what this is.
Right.
So I think Adani has picked the right bet, in my view. And I think in my view, it does allow them to build their competency here. And I think if they do well, I think they will probably be doing more of it, not just in India, and also beyond India, because I think this is not going to be the end of it, right? I mean, just as that's happened in Visakhapatnam, it will happen in other cities in India, and also beyond India and other developing and other developed countries also.
Right. Okay, let's leave it at that this morning. Manish Maheshwari, always a pleasure. Thank you so much for your time.
Thank you. Thank you for having me there.
Moving on now, the International Monetary Fund has revised India's GDP growth forecast upwards for the current fiscal year to 6.6%, up from its earlier estimate of 6.4%. The IMF said the increase reflects strong domestic growth momentum, which has more than balanced the impact of US tariffs on Indian exports. Now, in its latest World Economic Outlook, the IMF noted that India's growth projection for 26-27 has been slightly lowered by 20 basis points to 6.2%. The report explained that the upward revision for 2025 comes from a strong first quarter performance, even as higher US tariffs weigh on trade. The Indian economy grew, remember, 7.8% in the April to June quarter, the fastest pace in 5 quarters before the US imposed new tariffs. Now, earlier this month, the World Bank also raised India's growth forecast for the current fiscal year to 6.5%, reaffirming that India remains the world's fastest growing major economy. Remember, in July, the IMF had projected India's GDP growth at 6.4% for both 2025 and 2026, while its April outlook had placed it at 6.2% and 6.3% respectively. For emerging markets and developing economies, growth is projected to ease modestly from 4.3% in 2024 to 4.4%, 4.2% in 2025 and 4% going forward in 2026. The Employees Provident Fund Organization, or EPFO, has simplified, and some call it perhaps complicated, its withdrawal rules, now allowing members to withdraw up to 100% of their EPF balance. Now, this move aims to make it easier for over 7 crore members to access their savings while still securing their retirement. This decision was taken at the 238th meeting of the Central Board of Trustees, chaired by Union Labour and Employment Minister Mansukh Mandaviya. EPFO has merged 13 separate withdrawal rules into one single rule, making the process simpler and more flexible. Now, withdrawals fall under 3 categories: essential needs, including illness, education, and marriage. Then there's housing needs, as well as what it calls special circumstances. Now, under the new rules, members can withdraw their entire EPF balance, including both employee and employer contributions. Education withdrawals are now allowed for up to 10 times, while marriage withdrawals can be made up to 5 times compared to the previous combined limit of 3. The minimum service period for any partial withdrawal has been set at 12 months. Now, for withdrawals under special circumstances, members no longer need to provide reasons. EPFO has also ensured that 25% of the balance remains in the account, allowing members to continue earning 8.25% as the current annual interest rate and building a strong retirement corpus. But the new rules, while they enable automatic settlement of withdrawal claims with no documentation required, they also have a big catch here, and that is that EPFO has also revised the waiting periods. Now, final EPF withdrawals now require 12 months and final pension withdrawals 36 months, that's 3 years after retirement, up from the previous 2-month waiting period. And this has attracted criticism from experts who believe that in cases like job losses, for example, earlier you could withdraw your EPF balance in just 2 months, but now 12 months is what it's going to take, a full 1 year in the case of a job loss, for you to access your own money in EPFO accounts. Now, gold prices surged yet again sharply, this time as well on Tuesday, hitting an all-time high of 1,30,800 rupees per 10 grams in the national capital, up by as much as 2,850 rupees per 10 grams. Now, the jump comes just days ahead of Dhanteras, driven by heavy festive buying from retailers as well as jewelers. Now, according to the All India Sarafa Association, 99.9% purity gold had crossed 1,27,950 rupees per 10 grams on Monday. Similarly, gold of 99.5% purity also advanced by as much as 2,850 rupees to 1,30,200 rupees per 10 grams. So far this year, gold prices have jumped by 51,850 rupees per 10 grams. That's a 65.67% rise from 78,900 odd levels at the end of 2024. It's not just gold. Silver also recorded a lifetime high of 1,85,000 rupees per kilogram, up 6,000 rupees, marking its 5th consecutive day of gains. The white metal had settled at 1,79,000 rupees per kg in Monday's session. Traders say the sharp rise in bullion prices is due to robust festive and wedding season demand, along with a weaker rupee, which spiked 12 paisa, slipped 12 paisa to 88.80 against the US dollar, revisiting an all-time low. Now, internationally, spot gold traded at $4,140 per ounce, slightly below its record high of $4,179 per ounce. According to experts, metals are gaining on rate cut expectations, ETF inflows and concerns over the US economy with India. Facebook, WhatsApp, Instagram parent Meta has announced new restrictions on Instagram for teen users, setting all accounts under 18 years to a default PG-13 content. Teens will no longer be able to change these settings without parental permission. The update also blocks posts with strong language, risky stunts, or content encouraging harmful behavior, including marijuana-related posts. Accounts that regularly share age-inappropriate content will be restricted from interacting with teen accounts. Parents can now apply an even stricter limited content mode, further restricting posts, comments, and messages. Meta says artificial intelligence used in chats and experiences will also follow the PG-13 standards. Time for a short break, but on the other side, we'll have market expert Nishchal Maheshwari with us to decode why are the bulls running away from the Indian markets, what's really going on, and how long do you have to wait to see that little dash of green in your stock portfolio. That and more, you're watching Morning Brief at 9.
In association with Can't Do without Servo 40 Extra from Indian Oil.
Alakazam face disappear. Moonlight.
Smooth, silent, seamless. Sliding systems from headache.
This is my tempo.
The ultimate biking experience is incomplete without Servo 40 Extra from Indian Oil.
Breaking them all over.
Can't do without it.
हम यहाँ जान पे खेल रहे तो फोन पे खेल रहा है।
अरे पापा की गाड़ी का इंश्योरेंस रिन्यू कर रहा हूँ।
बड़े शौकीन पापा है। इतनी बड़ी गाड़ी
तो एको से कराना।
क्यों?
क्योंकि जितनी बड़ी गाड़ी
एको पर उतना ज्यादा फायदा।
नहीं फटा।
अब फटी कार का एक्शन हीरो एको।
एसोसिएट स्पॉन्सर बैंक ऑफ बड़ौदा के संग त्योहार की उमंग।
Welcome back. You're watching News9. This is Morning Brief at 9. All to all the action from the Lal streets. Well, after yesterday's red closing, when Sensex had dipped as much as 170 points, there seems to be a slightly better, greener start to the trading day this morning. In fact, as things stand right now, just few minutes, 5 minutes, in fact, after markets open, Sensex and Nifty in the almost happy territory, if one can call it that, already 0.4% up on the index. But remember, this also comes at a low base, and low base which has been accumulating over the last many trading sessions. So we are seeing a dash of green this morning, but the range and the range bound action that we are seeing on the index continues to be intact. So Sensex at just about 82,350 odd levels, Nifty 50 at about 25,250 odd levels. Meanwhile, the small cap and the mid cap space are also in the happier zone this morning. The Nifty mid cap 100 index is up about 0.6 of a percentage point, while the Nifty small cap 100 index is in line pretty much with Sensex and Nifty right now at about 18,000 odd levels. Let's look at the Nifty 50 heat map and see which are the sectors which are adding to the positive momentum this morning, and it seems to be a little bit of a mixed bag here. The IT space is looking good this morning, barring Infosys and Tech Mahindra. Remember, Tech Mahindra results not auguring too well investors don't seem to be too bullish on that stock this morning. Infosys also down about 0.4% or so. Meanwhile, we are seeing better news coming from HCL Tech, Wipro and Eternal as well as TCS. Meanwhile, Maruti Suzuki is up about 0.3%, Mahindra and Mahindra up about 0.6%. Tata Motors, which did go ahead with that demerger and the split up of the Tata Motors share when you had seen in fact on the charts that it had at one point fallen about 40% owing to that demerger. It's holding up well this morning. Tata Motors stock is up in the green. Meanwhile, the consumer non-durables, the FMCG pack is looking fairly buoyant with Nestle and ITC taking the lead on that one. We have market expert Nishal Maheshwari joining us this morning. Mr. Maheshwari, good morning. Thank you so much for your time. First up, I think it's tough to look at these charts on a day-to-day basis and really try and make sense of which way the markets are headed. But looking at data in a more nuanced manner, are you able to sort of form a trend line as to where are we headed? Are we likely to be range bound for as long as perhaps there is something earth-shattering that comes by way of the United States?
Hi, morning to you and your viewers. So I agree with you. I think 1st of November is the date basically where I think the market is now sort of pivoting towards, because that's the day Donald Trump has said basically they will be implementing 100% tariffs on China. And we have started seeing some amount of retaliation. I think today there has been some investigations against US shipbuilding companies by China. So I'm saying this tit for tat continues, and that's why the market is jittery. That's why we saw yesterday sell-off happening. And till this tariff issue and the trade issue gets settled broadly between US and China, I think markets are going to be in a sideways moment.
Okay, but this dependence on global capital, and we are seeing that every time there's a spelling spree, we don't have as much buying action even at good valuations from the retail investors. Some argue that perhaps it is because of the retail investor buying that markets have not fallen as much as they potentially could have. But I want to understand purely from a retail investor sentiment and investment strategy perspective, are valuations okay right now? Is this a good time to invest in markets and stay invested and hope that, these 3 years, additional 3.5 years of Trump's presidency are eventually going to fade out and India is a good and a happy spot to be in for the long term, given all that we are seeing in terms of macros coming from our own domestic economy?
So I'll just put it in maybe a short term, medium term and a long term.
Okay.
I would say basically in the longer term, obviously India is a great place to be. I'm saying on an average, if I look at it in the 3 to 5 year kind of a horizon, I think you can easily say 6% kind of a GDP growth, and a nominal growth of something like 9 to 10%. I'm just assuming a 3 to 4% kind of an inflation.
Yeah.
So I think a 10% kind of a nominal growth, most companies would be achieving a 12 to 15% kind of growth. So I'm saying a market also, hopefully that all leads to same kind of earnings growth. So on a 3 to 5 year basis, yes, a great place to be in. On a medium term basis also, I think as soon as we get out of this issue of earnings issue, I think the current year will continue to remain sideways basically as far as earnings is concerned.
Okay.
So outlook for the next year seems to be much better. And that's why, because you are coming from a lower base of 26 and 27 obviously will be a better year. So I think on a medium term basis, you should be okay. It is a short term basically where you have got issues. I think there is going to be a further earnings cut happening for FY26.
Right.
Given that 2 quarters have been disappointment. So that's where I think the issue remains to be, and that's why you don't see market moving beyond anything.
Right.
Now, retail investors, I think in the short term, the pain has only exacerbated, given that last 1 year returns have been negative now.
Correct. So in the short term, what should they do? Just stay invested, not look at their portfolio, not look at the numbers every day and just hope that the short term will pass and the medium term will arrive?
So I think the advisors have guided them well basically, because equities is not a short term investment at all.
Right.
If you want a linear kind of a return, basically you should be in FDs or something like that. equities is always basically lumpy. You'll have very good 3 years, what we had in the last 3 years, and then you have 1 year basically which will be flat or negative. So that's a way basically equities have behaved in the last 50 years. It will continue to behave that way because this is a business and this is not a fixed income product. So people should be patient with this, but eventually you will find that a 15%, 12 to 15% kind of a return over long term, CAGR I am saying, you will, but that may not happen every year is what we have to be cognizant of.
Right. Any change in asset allocation at this point, given that the massive surge that we've seen in gold prices and the general rule being that, just park no more than 10 to 15% of your money in gold, given that you're saying the short term is going to be sideways, the medium term could spring up slightly better numbers. Is this a good time to make a slightly bigger allocation towards gold, or too late, that bus has already left the station?
I think it is too late now, basically, because the market in in both gold and silver are very, very frothy, and it's become more of a trading thing rather than an investment thing at the moment. So I would avoid investing in gold and silver at the moment.
All right. Talk to us about sectors. You said the long-term story, obviously, for India is great, given all that we are seeing domestically, and the momentum in the economy is fairly strong. So, are there specific sectors that you think are going to deliver much better growth compared to their peers over, let's say, the next 3 to 5 years?
Definitely. I think what we need to focus is basically the sectors which the government is also focusing on. So you see solar doing very well in the last 5 years, defense doing very well in the last 3, 4, 5 years. And the continuous focus on these two sectors continues to be there. There is amount of policy changes, government support. Another one which is getting added is now semiconductors. These are 3 or 4 sectors basically where the government is very focused, given the long-term and strategic nature of all the 3 sectors. And then you have to look at what is the ancillary sectors which will also get positively impacted by this. So when you say semiconductors, power is definitely a sector basically which will get positively impacted by this, because semiconductors by nature require huge amount of power. So that's a way basically one should go about it. But these 3 sectors, along with power and banking to a extent in the shorter term, I think these are the 4 or 5 sectors one should be investing in the next 3 to 5 kind of years, basically.
Okay, let's talk also about the banking sector for just a bit, and I will in fact also come to the IT sector and get your views on that. But on the banking sector front, given that we've seen fantastic inflation data, come in just 2 days back, and we are now looking at the lowest inflation since 2017 or something. Is there now merit for RBI to really hammer down interest rates and really cut it, slash it, maybe more than 1% or so, and really push for some sort of uptick in capital investments? Because that is something which is going to have a much bigger multiplier effect than keeping rates high at this time.
So we have to be cognizant basically that the rupee is also depreciating, and that will create a big problem. And that's why you saw in the current last policy basically, even though the inflation was low, RBI has not gone in for a further cut. And the reason being basically that rupee is depreciating against the international currencies. And if you cut interest rate further, basically you will have further pressure on the rupee. So I don't think so RBI is going to cut in a hurry now. They have already front loaded it very well. We have yet to see the transmission of that interest rate cut itself, 100 basis point which RBI has done. I think that itself is enough basically for jump starting the economy. So no need for further cuts, I think, basically, but I'm sure there will be a cut or two in the remaining part of the year.
Okay, but if the rupee does get weaker, sir, does it really matter much? I mean, at the end of the day, we want to push our exports, right? So won't exports become lucrative if the rupee depreciates?
But then you are actually going to be having a problem on your foreign reserves. The second thing remains to be basically when you start importing at a higher price, you import inflation from abroad. So I think that is going to be a major issue. And you do not want your currency to depreciate beyond a particular point. 3 to 5% is what RBI, I think, is comfortable with. And they wouldn't allow beyond that.
All right. I also want to spend a minute with you on India's IT stocks, and IT stocks, especially the ones that pack the Nifty 50, the constituents of the Nifty 50. So this has been a pretty much a horror story over the last 1 year or so. In fact, ever since Donald Trump has come to power, and even before that, when we did have inflation skyrocket in the US, plus the disruptions caused by AI, India's sort of, blue chip, bellwether, IT sector companies just don't seem to be able to getting out of the woods as yet. What do you make of the medium to the long-term story of these, big five, big six Indian IT firms for investors?
So I think the bigger problem which you have highlighted is the AI. So there is a structural and a fundamental change which is happening, and I think the market and the companies have yet to get their arms around this. What kind of cuts, what kind of impact, how much of this business basically, and India is largely, as you are aware, basically largely services services country. So what kind of impact AI is going to have on the basic services itself, I think that is not defined as yet. And how it will impact the business. So I'm more worried about this than anything else, except about that H1B and Trump effect and all. I don't think so that is much of a issue.
Right.
I think the market is grappling with the AI and the fundamental change which will happen in the IT sector.
All
and
right.
that's why you're not seeing any bottoming happening in a hurry as far as IT is concerned.
All right, Mr. Maheshwari, we will leave it at that this morning. Thank you so much for your time, and a pleasure as always having you here on News9. And moving on now to the defense sector, which Mr. Maheshwari was talking about just a while ago. Now, even as we see a truce between Israel and Hamas, one could say, in the Middle East, even though there was fresh fighting, what the nature of warfare has told us over the last 3 years or so, ever since there have been at least 2 active conflicts, is that potentially the nature of warfare has changed, and drones and cyber security and cyber threats seem to be what the next warfare strategies are. At the News9 Global Summit in Stuttgart last week, Rajinder Singh Bhatia, SIDM President, as well as the Kalyani Strategic Systems Chairman, spoke to us, and I began by asking him if India is actually making the right decision by investing in fighter jets like the HAL's AMCA, the new advanced medium combat aircraft, rather than investing in drones. Let's listen in to what he said at the News9 Global Summit.
This is the point where we all need to deliberate. There are gaps in technology. But before we come to the gaps, let's see what we have achieved in last decade. Exports have gone 13 times in last 7 years. Defense production has doubled in last 5 years, and the target is to double it further in the next 3 years. But you are very right on some significant programs, and the technologies are still not there. In fact, that is one area. We all hear about aero engines, but similar situation exists in marine systems, where there's a very strong company sitting in Germany, MTU, which has a market share, and where we could be working together to develop those high-powered gas turbine engines for the marine platforms. Now, coming back to the investments, all this revolves around the market size, the ability of people to tap that market, and then investments follow suit.
And we will slip into a short break, but before that, some of the global stories that we're tracking for you this Wednesday morning. US President Donald Trump warns China that Washington could hit back by halting cooking oil imports after Beijing freezes American soybean purchases, escalating the trade showdown even further. Trump vows to move against Hamas if it refuses to disarm, demands immediate return of hostages, says patience with Gaza's leadership is running out. US President Trump accuses Russian leader Vladimir Putin of dragging out the Ukraine conflict, says Moscow has shown zero intent for peace, a sharp reversal from Trump's earlier optimism of a quick deal. As the US government shutdown enters the 14th day, Trump says he'll release a list of Democrat-backed programs on the chopping block, warning stalled talks could lead to permanent cuts. Calling Spain's NATO budget disrespectful, Trump threatens tariffs if Madrid doesn't meet its 5% defense spending target, stepping up pressure on European allies. Trump signals US aid could dry up for Argentina if President Javier Milei fails to win national elections, turning up heat on his libertarian ally to steady Argentina's economy. Top US banks including JP Morgan, Goldman Sachs and Citigroup report record gains amid a hot market, but caution that inflated asset prices could spell turbulence ahead. South Korea's tech titan Samsung says surging demand for AI chips has fueled a major profit rebound, its cleanest sign and the clearest one yet of a global tech recovery. China's electric vehicle powerhouse BYD now eyes Spain for a new car factory, a strategic move to cement its foothold in Europe and challenge Western automakers on their home turf. These stories on the other side of the break. You're watching News9.
एसोसिएट स्पॉन्सर बैंक ऑफ बड़ौदा के संग त्योहार की उमंग।
The answer.
ये बेस्ट है सर।
हमेशा वाला क्यों नहीं?
मिश्रा जी, आपके लिए फूलों की बरसात। बिरला ओपस एश्योरेंस देने के लिए।
मतलब प्रोडक्ट वारंटी?
ये एक्स्ट्रा है। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे।
वापस करके देंगे?
वो भी फ्री। पेंटिंग में पहली बार बिरला ओपस एश्योरेंस। रजिस्टर करो birlaopus.com पर।
Back, you're watching News9. This is Morning Brief at 9. On to the global stories for you this morning. As always, let's begin with the United States. US President Donald Trump slammed China's halt of American soybean purchases as an economically hostile act, warning on Tuesday that his country could in turn stop buying cooking oil from the world's second largest economy, that's China. Now, Trump wrote on his Truth Social platform, and I quote, "We are considering terminating business with China having to do with cooking oil and other elements of trade as retribution." Now, this, however, came just after Trump told reporters at White House that Washington shares a rather fair relationship with Beijing. According to government data, US imports of animal fats, greases and processed oils, including those used in cooking oil, have skyrocketed in recent years, driven by rising domestic production of biomass-based diesel. Now, meanwhile, in an interview with the Financial Times on Monday, US Treasury Secretary Scott Bessent slammed China, accusing it of seeking to harm the global economy following China's sweeping new export controls in the strategic field of rare earths. Last week, Trump also threatened to scrap a planned meeting with Chinese leader Xi Jinping at the Asia-Pacific Economic Cooperation Summit starting later this month. While tensions between Washington and Beijing have de-escalated from their peak, the truce still remains shaky. US President Donald Trump also declared on Tuesday that the United States will take action to disarm Hamas if the group fails to do so voluntarily. He also urged Hamas to release the bodies of remaining hostages still held in Gaza. Now, Trump's statement followed his recent visit to West Asia, where he marked the historic and much-awaited Gaza ceasefire agreement amid growing uncertainty over the next steps between Israel and Hamas. Notably, Hamas continues to refuse disarmament, a key condition in Trump's 20-point plan aimed at securing a lasting ceasefire and peace in the region. Listen in to the US President.
But we have told them we want to disarm, and they will disarm. And if they don't disarm, we will disarm them. and it'll happen quickly and perhaps violently.
You say,
But they will disarm. Do you understand me?
Yes, you say
Because you
quickly.
always, everyone says, oh, well, they won't disarm. They will disarm. And I spoke to Hamas, and I said, you're going to disarm, right? Yes, sir, we're going to disarm. That's what they told me. They will disarm, or we will disarm them. Got it? Okay.
And from one war on to another, as Ukrainian President Volodymyr Zelensky prepares to visit Washington this Friday to discuss Kyiv's air defense and long-range satellite strike capabilities with US President Donald Trump. The American leader on Tuesday renewed his criticism of Russian President Vladimir Putin, saying Putin is unwilling to end the war in Ukraine. Now, speaking to reporters at the White House, Trump expressed disappointment, recalling their previously good relationship. Listen in.
Look, I'm very disappointed because Vladimir and I had a very good relationship, probably still do. I don't know why he continues with this war. This war has been so bad for him. He's going into 4 years of a war that he should have won that war in 1 week. He's now going to soon be into his 4th year. He's lost 1.5 million soldiers, probably, close. Certainly in terms of wounded and no legs and no arms and all the things that happen in horrible wars. It's a horrible war.
And from Trump's global disappointments to his own domestic ones, US President Donald Trump announced on Tuesday that his administration will unveil a list this Friday identifying Democratic programs stated for closure due to the ongoing federal government shutdown. Now stretching into his 14th day, this marks the 15th shutdown in US history with no end in sight as Republicans and Democrats remain deadlocked. Now, both sides continue to trade blame for the political standoff and the widespread disruptions it has caused. Listen to Donald Trump again.
So we're closing up programs that are Democrat programs that we wanted to close up or that we never wanted to happen, and now we're closing them up. And we're not going to let them come back. The Democrats are getting killed. And we're going to have a list of them on Friday. We're not closing up Republican programs because we think they work. So the Democrats are getting killed, but they're not telling the people about that. I say nobody.
Well, US President Trump also on Tuesday threatened to impose tariffs on Spain for its refusal to meet the NATO defense spending target of 5% of its GDP, a benchmark Trump strongly advocates. Now, speaking at the White House, Trump called Spain's stance very disrespectful to NATO and said he is seriously considering trade penalties as a consequence.
I'm very unhappy with Spain. They're the only country that didn't raise up their number to 5%. Every other country in NATO raised up to 5%. And Spain is doing very well off our backs. So I think what they did is not nice. I think it's very disrespectful to NATO. In fact, I was thinking about giving them trade punishment through tariffs because of what they did. And I may do that.
Remember, as Donald Trump just mentioned, Spain remains the only NATO member out of the 32-nation bloc to reject the 5% goal agreed upon in June, opting instead for a spending level of 2.1%, which Spanish Prime Minister Pedro Sanchez described as sufficient and realistic. Now, Madrid argues that its commitment to the alliance is demonstrated through significant troop contributions in NATO missions across Europe, as well as investments in cybersecurity and environmental defense measures. And continuing with his tough talk on allies, US President Donald Trump has now turned his attention to Argentina as he warned on Tuesday that America's financial support for Buenos Aires could end if his libertarian ally, President Javier Milei, fails to secure key legislative wins later this month. Now, despite Trump's recent pledge of $20 billion as part of his administration's pledge to stabilize Argentina's struggling economy, market confidence remains shaky and Milei's midterm election prospects appear uncertain ahead of the October 26th polls. Now, praising Milei as a great leader, Trump pledged his full endorsement of the Argentine President Party in the crucial vote, underscoring how U.S. backing is closely tied to Milei's political success. Major U.S. bank executives reported strong earnings for the third quarter, driven by a robust equity market and resilient economic conditions despite ongoing tariffs. Leaders from top banks like JP Morgan, Goldman Sachs and Citigroup highlighted record revenues in trading and investment banking. However, some executives cautioned that asset prices appear elevated, suggesting potential market frothiness that could pose risks ahead. Take a look.
Executives at the big U.S. banks said more windfalls are coming after a strong quarter for stocks and a resilient economy, despite sweeping U.S. tariffs. But some warn that asset prices look frothy. This comes after JP Morgan Chase, Goldman Sachs, and others posted quarterly results at the start of earnings season. Investment banking revenues surged 42% at Goldman and 16% at JP Morgan Chase. Wells Fargo and Citigroup also saw investment banking gains. But shares of Goldman Sachs fell as much as 5.5% in Tuesday morning trading, as analysts said the bank's trading business underperformed market expectations, even though financing for that segment was strong. Meanwhile, shares of Wells Fargo jumped as much as 6.5%, as the bank raised its closely watched profitability target after regulators removed an asset cap on the lender. A Wells Fargo executive told journalists on an earnings call, quote, "Pipelines look good, the activity levels are good, and the conversations with clients are constructive." A JP Morgan Chase executive also said the investment banking environment is quite good after the bank saw its busiest summer in M&A for a long time. The strength in M&A is being buoyed by higher asset prices, where U.S. stocks have repeatedly hit records. However, that is causing some concerns. JP Morgan Chase CEO Jamie Dimon said, quote, "A lot of assets are looking like they are entering bubble territory, but those prices fuel investment banking, equities, and asset management." Dimon said that in credit markets there were, quote, "early signs of some excess."
And Chinese electric vehicle powerhouse BYD is stepping up its European expansion drive. Media reports suggest Spain has emerged as the frontrunner for BYD's third car manufacturing plant in Europe as the company looks to strengthen its foothold on the European continent. The move would mark a major step in the automaker's global growth strategy, coming amid rising competition with European and US EV brands. Here's more on BYD's next move.
China's number one automaker BYD is reportedly considering Spain to be its top candidate for a third car factory to serve the European market. Two people briefed on the matter spoke to Reuters as the company seeks to grow sales on the continent. A BYD assembly plant joining two other planned factories in Hungary and Turkey would be a significant boost for the car maker and would also bolster Spain's aim of becoming a major hub for EV production. One of the sources said Spain is favoured by BYD because of its relatively low manufacturing costs and clean energy network. A third source cautioned that the company has not communicated any final decision and was still considering other countries besides Spain. A final decision on the plant, which should come before the end of the year, will need to be approved by Chinese regulators. Both Spain's industry ministry and BYD declined to comment. BYD's sales in Europe jumped 280% in the first 8 months of the year from the same period in 2024. That was after the automaker began selling plug-in hybrids as well as fully electric cars.
And with that, it's a wrap on this edition of Morning Brief at 9. Thank you so much for watching, but don't go anywhere. Neha Bhan is coming up with the latest news on the other side of this break.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts